Good morning, everyone. Microphone check, screen check. Yeah, looks like everything's working correctly this time. Fingers crossed we can make it without the power going out. It's just, sorry about yesterday. Yeah, well, you know, when when you try to get things going and 7 minutes in, everything shuts off on you. There's not much you can do, you know. The old house, we used to have backup generators and all that. I'm gonna have to dig out my old UPC and see if I can get that hooked up to the router too. But whatever. Either way, we're back. So fingers crossed everyone had a chance to rest up, and hopefully yesterday you had a great trading day. How's it going, Steve? Good morning. Hopefully everyone had a good trading day yesterday. I wasn't able to really look at it much or really do anything, to be honest, but hopefully there were some nice opportunities there. As per the usual, let's jump on in here. Make sure to read through the morning prep PDF on the right side of the screen. They're very important to understand everything that is inside there. And of course, a quick note for you all before we jump on in, if you're watching on the YouTube side of things, the stream does have between like a 5 and 30 second delay. That will definitely impact the timeliness of what I may be talking about at any given moment. And Steven, good morning. Also, I just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Welcome to the SSFTG fam. I'm super excited to have you all on board, but if you're not part of the fam yet, there are a ton of different options to join up. The easiest way is to join as a YouTube member with the join button right below the stream there. It gets you in the chat room, the YouTube community board, stock and crypto chart posts, and all that fun stuff. And it gets you a little bit more, behind the scenes and what's going on. Of course, if you want to understand how we do everything, check out the Day Trading Academy along with everything else, tons of stuff over at SSFTG.com. So whether you're here for the first time or the 1000th, good morning and welcome. I hope you are all ready to rock and roll alongside of me today, analyzing these crazy markets of ours. Let's take a look at some news, take a look at some charts, see what all is going on for today. I feel like we've already made it farther than yesterday, so we're off to a good start. Anyway, let's jump on in here. Don't forget to grab your morning DP levels. Those are posted for you on the Major 7. NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. They're all waiting there for you. Today is Wednesday, and that means that we have Crude Oil Inventory Day today. So looking at the news calendar, of course, the big one's going to be at 10:30. If we look at the inventories, we've got the forecast at 1.857. Now, of course, along with the inventories, we also got to take a look at the API to give us an idea as to what is going on there. And here we can see the API report is showing us that they were expecting a 2.23 versus a forecasted 1.857, so a little bit smaller there. But at the same time, they came out at a positive 3.29. So the anticipation here is that we probably come out around like 3 million, right? We've got to shrink the number a little bit because the forecast is a little bit smaller. So instead of 3.29, we'll just say 3. That's generally the mindset going into today for crude oil, is that we should see a build of about 3 million or so, which is anticipated to be bearish. Of course, we can see the market's been dropping the whole time. And when that's the case, it makes it a little bit more difficult. But why do I have two separators down here? I have to delete one of those. I don't know why that's there. Yeah, whatever. Anyway, let's take a look at some charts and see what's going on here. Over on the NASDAQ, first off, the market just doesn't stop going higher. This thing is screaming to the upside. And, well, it's not letting off the gas pedal seemingly anytime soon. The overall movement that we've got going on is very, very nice in terms of the channel formation. Earlier on, we had a beautiful bounce. Whoops. Beautiful bounce off of the channel lows, demonstrating how much support is there. But when we came up to the highs, nada. Nothing. It's like it wasn't even there. Totally non-existent. So, I mean, really, that does kind of demonstrate that the bulls are trying to break this away. Maybe this becomes a midline. I mean, if we were to move this in a little bit closer, grab some of the price action that's happened around here, and then project up about another distance or so, and I always over project, so I'll come in a little bit. This will give us an idea as to where a potential upside could be. And that tells us that it should be right about there. So if this does end up being a midpoint, then we've got quite a ways to go yet. I mean, we've got up into like the 15,700s. And given the movement that we've been seeing lately, that's not unheard of by any means. So, I mean, we've got some really nice momentum to the upside. Bulls are very, very strong. And, I mean, at the very least, even if this doesn't end up being a midline, we do have to at least give them the benefit of the doubt that we've got a channel coming into play. And we haven't hit the highs of it, and we're coming into the lows. Maybe we just go a little bit sideways. That'd be a really nice transitional phase, get a trap into the lows, retest the base, and then go screaming back to the highs again. That might be really good, but, well, as it stands, I guess we'll just have to wait and see. Mostly sideways, but the overall trend is massively bullish. Over on the S&P, still continuing higher here as well, and of course, massively bullish as well. I mean, we're not pulling back, you know? None of these are really pulling back at all. The largest pullback that we had was over here, which, I mean, what, from the top to the bottom was 134 ticks? That seems like a lot, but when you compare it to the last pullback being 400, or at the smaller point of it, 276, these 130 tick pullbacks are doing nothing. They're not helping anybody. A lot of traders are going to be looking for those value pullbacks. And if we look at the most recent value from top to overall bottom, 399. From top to initial pulse was 284. To the overall low was 422. I mean, we can kind of see, you know, what the average value pullback is. And if we look at the full move, first off, this move down is 536. So, you know, again, in the 4 to upper 500s, but then doubling that, and this is what I really wanted to see, because this obviously expanded lower, is 840, which is about twice the amount of the value pullback. So we know what the value pullback looks like. I mean, it's there. It's pointed out for us. We haven't had a single one even close. Just the biggest one we've had is 134. So as far as a value pullback is concerned, if we're looking off the top and we do end up getting a halfway decent pullback, generally speaking, we want it to be in the we'll just say about 400, but 399 would be there, down to, what, 420. Great number, 420. Really, really teeny tiny little zone here, huh? All right, well, I'll go 440, and just so that the zone's a little bit bigger, but that's kind of the area of interest right now. Obviously, we're miles away from that. That would be the S&P back at 4418. So, I mean, no, don't get me wrong, it could definitely happen, but man, this is why it's so hard to be a buyer right now, because it's just up in the stratosphere. If it ends up being a midline, then got a long way to go. On gold, continuing to the upside, getting some higher lows, higher lows, higher lows, short-term higher highs. The trend is still trying to continue. You know, I mean, we've got this balance point, which was created inside here, with a little bit more continuation up. And if they were trying to break underneath the channel lows, well, they didn't do so well. And an inside pullback would look really nice, right around like the positive half DP. But if we stretch this more recent support out, that would give us back, that would put it like over here. So it's kind of variable where it is. How's it going, Maurice? Good morning. Could that be due to the tech companies making all-time revenue and profit? I mean, definitely. Yeah, there's just no pullback. You know, and everyone's like, well, it's got to pull back. But then you look at the earnings that are coming out, like, they're all-time higher. Like, huh? I mean, I guess we just keep going higher, you know? Hey, we got to follow the chart, and the chart just keeps saying up. So, I mean, it is what it is. SOCKS. As long as you can spell socks. Good morning, Brad. Vicky, good morning. Everybody else so far, good morning, good morning. We're still here. We haven't crashed. The power hasn't gone out yet, so we're solid. Anyway, going back to gold, we've got the overall continuation, which is suggesting that the bulls are still trying to keep this going up, right? And, I mean, what a disgusting mess of a chart this thing is. You know, absolute train wreck. It looks awful. Just terrible overall structure. I mean, the first move started off with an L5. We rotated off of no L2, need the L2, need the L2. They finally got the L2, got the bounce. And then after that, it all kind of fell apart. They got the L3, rotated back up to a new high, failed, all the way back down to another L3, broke back up again. Couldn't even pull back to an L1, and when they finally did pull back, it was back to another L3. Not very frequently do you get a rep L3. Hey, it was there. And now we've got the more recent price action, which is kind of continuing back to the upside. If we disregard the overall previous, whatever you want to call that, and we look at what's going on more recently, we do have a higher low which transitioned off of an L4, and that L4 held off the L1, broke into a new high, continued back down into another L4 before rotating back up to another new high. So bulls do have a reason to believe that there's some expectation of bullishness around the 1783s or so, down to like the 81s. That's going to be the hot spot as far as an area of interest for the bulls to try to continue back up. If we're looking at this from a volume perspective, from the top all the way down, first off, if we go all the way up to the highs to kind of see where they landed, we've got the POC back in the 1758s. And the major concern before was that, are they going to reach out and get it? And they didn't. Right? So, I mean, now that they haven't, if we go to that new higher low and continuation back up to see where they're at, nothing has really changed a whole lot, but the bulls are continuing to defend. We've got to assume that they're taking their momentum to the upside. Let's see how it lines up. If we go from that POC all the way down to the bottom, I know it seems chaotic, but if we look at where the scalpers' objectives are to see how do they line up, do they want to follow through? Did they have any support resistance there? Well, there was a little bit of a pushback, a little bit of support, kind of chopped through, a little bit there again. You know, here again, if it pulls back, that might be extra little support, but this one doesn't really tell us a whole lot. We're not necessarily seeing enough off of that scalp distance. Now, if we go to a slightly larger 2-to-1, we can see that, well, they're just, it didn't trigger. It didn't allow anybody in. So the only traders who would have been looking for an entry here would have been the stops underneath the lows. And if we're looking at that perspective then, from the POC, we can see that we're kind of bouncing off the 2-to-1, but they never really pulled back and got it. So, you know, there will be buyers who are buying way up here. But if that doesn't hold, we could be in for a lot larger pullback to reload some of the bulls who haven't had a shot yet. I don't know, we'll see what they want to do, but kind of touchy where it is now. And given how spiky and pointy it's been lately, I don't know. Anyway, over on crude oil, we've got the 15-minute rotating back to the kind of a wedge-ish, bottom-ish, whatever you want to call it. I mean, the wick at the bottom kind of gives a pretty big picture here. We've got a lot of buyers that are looking at wanting to buy the pullback. And if we look at the larger perspective, it's not as long-running as the NASDAQ is, but this has been going up for a very long time. And we haven't really had any value pullback of substance until right now. It just happened. So this is the first time that we've actually had any value pullback to a spike and channel low, at least, that could potentially allow traders a way in. Now, depending on how aggressively you draw this up, because you could see that this might be the start point right there, one could argue that it's a much narrower perspective like this. Now, if I'm going to be drawing it off of that, I got to see it hold on the highs as well. And it looks like, in the end, ended up just being a midline. But, I mean, it was there initially. And it's important to know where those traders were looking. But when we migrate back up to the highs, we can see if we... drop that down just a little bit there. There we go. Fit that down in the lows. We're starting to kind of round off towards those areas of resistance, double tops. It makes a little bit more sense. Obviously, buyers, given the support here, are making a move. But, you know, one thing that I would really like to see, aside from this just being a BTFD swing long type scenario, would be the sellers kind of failing and rotating back up. What's the volume look like? You know, who's winning the fight? And right now, the scale doesn't tip until it's above 81.66. So it's still very early. Not to say that the bulls can't win it from here, but it's early to the party. On the euro, continuing to rotate back to the upside, trying to continue this move up. One big important thing, we finally broken above the previous major swing. That does confirm a trend change potentially. Now, I say potentially because one big important caveat when you break above those highs is to keep making those new highs, right? Get that next new high and confirm it. Because what happens all too often is they'll break above the top, and then they'll do something like this, where it's lower high, obliteration all the way down to the lows. And in a very strong preceding bear trend, it's hard to ignore that as a possibility, right? So, yes, we did just transition over a previous major swing. But it's going to be difficult for the bulls to maintain that context until we can get above the major swing high as proof from the full trend perspective. If we're looking in the nearer term, obviously we've got higher low, higher low, higher low. I mean, it is in a trend. And if the bulls are going to continue that perspective, then we've got to see them get back up through some of these previous swing highs, the 66.55 POC at the top. We've got to see them get through this. And if they can make it up, then they've got a clear shot back towards the highs again to keep that longer term trend possibly going as well. We'll see. Bitcoin racing off to the highs again, 64s, 65,000 is not too far away anymore. Very, very small, pent-up, aggressive price action, which is constricting like a coiled-up spring. Don't stick your hands in there, not unless you're on the right side of things. They tend to eat your fingers. Same thing goes for Ethereum, gobbling up them fingers. We were talking about Ethereum kind of running behind and being a little bit slow to the party and not really showing up, right? And well, it's catching up. They're there. They're starting to rally back up towards the highs, 39, almost 4,000s, right around the corner. Higher low, higher low, higher low. We've got a wedge breakout. We've got everything the bulls need to keep this thing going. If we're looking at it from a deepest rotation perspective, we had an L5. So now that we do have this new rotation up, a deeper pullback towards settlement around 38.50 and L2 would make a lot more sense. Now, that's assuming that it turned around right this second. Doesn't look like that's going to happen, but we'll see. All right. Now, save your workspaces. Hopefully you've learned your lesson. Save your workspaces. Save all of your workspaces so you have all your drawings. That way, if, I don't know, something crazy like the power goes out, you don't lose all your drawings. Not that that happens or anything, but make sure to save those workspaces. Just throwing that out there. Anyway, looking at the NASDAQ so far this morning, I mean, we're predominantly sideways. It hasn't done a whole lot, and usually when we have this kind of momentum up, it sort of makes sense. I mean, what do we expect to see? I mean, there's been no pullback. We've been talking about this. There's been no pullback. So if there's not really any pullbacks along the way, then what's the context, right? Is someone stuck? I'm sure they are, but from where, right? This initial rally to the upside off of the bottom, remember, top-weighted POCs here make sense because the sellers are assuming that they're going to maintain that trend. They lost their grip on that trend over here, which is when the market started rotating higher. So if we look at that last swing high right there, that was their transition point right there at 15,071, give or take. Being exact doesn't necessarily matter too much. And that didn't change a whole lot from the higher lows. So let's continue from that point. Let's go higher. We've got a new POC, which is right there. They tried building into the next high, not even close. As we go higher, another massive POC. Wow, did they get a couple more inside there? We've got another one. Wow, they didn't. That was a lot of volume in there. And that POC shifted up there. So if we're looking at it from a break-even perspective, right, where are they short from? Well, reasonably, their average should be somewhere around here, give or take. Obviously, the market came nowhere near that. So what do we have? We have a short squeeze. The sellers are getting juiced. That's all this is. I mean, we know that, but trying to figure out now where they stuck from. Had they made any moves to get out? So far, we have all of the same POCs. See if anything new happens. My data's bugged. Are you for real? I've got to go all the way over here. Okay, well, there had to have been a POC there, and there has to be a POC here. Freaking bugged volume drives me crazy. So, given this information, if we go all the way to the end, nothing else has changed. What do we know about these traders, right? About these potentially stuck shorts. We've got 15,071, 15,150. Let's see, 15,291, 15,343.50, 15,379.75. And that gives us a total of 5 positions. So they are stuck short from 15,247, rounding down. So 15,247. Of course, God, I hate it. You know, when you try to put it on there and the price level that you need, Ninja will not let you put it on there. Like it's 47 quarter? No, oh, you must mean 46.75. Surely you can't mean 40. You must mean 47 quarter. Oh my God. Ninja, man, you're crawling under my skin. We're looking at break evens at 15,247. That's where they're stuck from at the moment. Assuming, of course, each one was an individual add-in. So what am I looking for today? I want to see a massive slide either today or tomorrow. Big slide down, V bottom off the break evens. That's what I'm looking for right now. I can't be a buyer way up here. I mean, I can, but we've got to be scalpers. Otherwise, we're looking for a major rotation down to 15,247. The same analysis, we do have 10 minutes, so the same analysis for the S&P, and in hindsight, I'm a freaking moron. I should have just held on to my longs. Yesterday would have been a power out, so I wouldn't have been able to trade him anyway. It would have been fine. We would have been all the way up here. just kidding, obviously. The first rotation to the upside, assumably, would, well, let's zoom this in a little bit here so we can see. I've got to take those off so I can see. Got the higher low rotation right there. So their first potential entry for the shorts to drive lower would be at 57 quarter. Continue that up to the next one, no change. Up to the next high, no change. Next high, still no change. Next high, new change. There we go. How's it going, Ace? Good morning, good morning. We've got the next high up here. That wasn't enough. There probably is a new one inside here, but my data is going to be bugged. Yep, of course. There it is, though. I got it right before the end of the day. All of these aren't going to work because my data is bugged, so I'm going to have to go to the new day and guess. And there would have been a POC there and there. S&P is definitely clumped a little bit more together here. And if we're going in the more recent price action, nothing has changed. So, as far as the S&P is concerned, 4507, 75, 4506, 4476, 75, 4471, 75, 57 quarter. And that is a total of 5 positions there as well. So divided by 5. 4483, rounding down. Remember, they're short. 8375. Thank you, S&P, for letting me actually choose it. I appreciate that. Put that on gold. That is where the S&P shorts are stuck from. Those are our 2 major points of interest right now. 4483.75 on the S&P and 79.75. No, sorry, 15,247 on the NASDAQ. Crude oil is catching some nice bullish rallying to the upside. Remember, the news is anticipated to be bearish. So as far as this rally to the upside goes, I'm kind of liking the way this is looking for shorts to try to build into this. But the POC is back at 81.54. And they're trapping the lows of that major support zone, and there's nothing until 82.27. So we've got to understand, right? Remember, from the bigger picture, and this is why we do the bigger picture analysis, we're coming off of a major point of interest for the swing longs. This is where the bulls are trying to take over. So as far as the bullish momentum to the upside at 81.70 goes, this is a really dangerous spot to try to take a short. So if I know that this is a terrible spot to try to look for a short probability-wise because I know that I'm going against the trend, then I need to optimize my entry as best as I possibly can and treat this as a pure swing. Entry to exit, nothing else. Now, there is a Jumbotron wick at the bottom, so I want to make sure that my entry and my target is in a logical point of interest. So if I get my target ahead of that volume node down there at 81.54, that means that I would require an entry point at 82.65. So the way that I would approach this then would be noting that we are supposed to have a bearish inventory today, right? Now, I know it is inventory day, and you're taking a risk if you're going to be placing a stop here, and trading anything in inventory day means that you're probably going to get slippage like crazy, right? When you're in a situation that's, well, you're around news. Any news announcement, you're going to deal with that. So That's something to keep in mind. But stopping points or at least breaks of that trend would be around 83. Not to say that the news can't whip above that. It certainly can, but 82.65 is going to be that zone of interest. Now, we can narrow this in a little bit closer and do a 5-to-1 and see if we can get a target roughly in about the same spot, and that would be at 77. And the risk on that is 230, so about 23 ticks and 35 ticks. Those are kind of the zones of interest along the way, depending on how it wants to play ball. I'm only interested in one of them, but I do want to pay attention to both, just to kind of keep an eye. Aside from that, there's not really much else going on. I mean, we've got the crypto market, which is really jumping around. Crude oil is getting stuck at 81.67, but it's... I don't know. I'm guessing you won't be buying any NinjaTrader merchandise, t-shirts, and hats and such. No, the only thing they got out of me was the license fee. That's that's it. I'm not planning on them getting much else out of me. That's for sure. How do you get your orders so wide? So when you're looking at it, let's if you open your chart trader, I've got, well, it's on Bitcoin, it'll be SIM, but whatever. If you're looking at NinjaTrader and you go into the properties and you adjust the properties to be like this, right there. Order display bar length percent of chart, 50. You can adjust that to 70, but it's percentage. So if you adjust it to 75 or, 90 or whatever, it's going to dominate like the whole screen. So use some common sense. There will be some issues like with scaling, where if you try to, I should be able to place an order. Oh. I guess NinjaTrader doesn't like me placing orders on Bitcoin, even though they're on SIM. It doesn't let me place SIM orders on Bitcoin, really? Okay. Ninja and... anyway. I was gonna see if it would do it, but whatever. So like here would be a good example. I've already got an order on crude anyway. So if I were to crunch this down, you'll notice like at some point it's not able to scale anymore and it starts going off the screen. So if your percentage is too high, you're just not going to see the order. It's going to cause problems. Oh, come on. Right there. There we go. Yeah, no problem. Hey, Sinai, how's it going? Good morning, good morning. Gold pulling back a little bit. Looking at the overall spectrum of what's going on here, we've got... I mean, we know where we're at on gold. This is a major zone of support, sure, in the short term. I get it, whatever. But, I don't know. These 1782s, this area... I mean, look at the percent... The potential of this falling down to 1758 scares the crap out of me. I don't want to be a buyer way up in the 81.6s. This is really tough to be a buyer up there. And I think you're seeing that fear translated into the faster time frame, too. Got the open right around the corner here in a minute. Hey, Duncan, how's it going? Good morning. And Bram, good morning. I don't think I actually said good morning. I just went straight into answering questions. Whatever. All right. Gold getting a little bit of a dippy-doo-dah. That was a new low, right? Yeah. Ooh, man. POC shifted up to 85, but that preceding impulse POC being down at 79.2. Okay. Yeah, let's get up and close. That's fine. 9:30 hits. Stock exchange is open. We're seeing some bullishness coming into play here with a nice rally up at the start of the day. Looking at the faster time frame, I mean, not really much has happened. We're just kind of grinding our way higher in what appears to be maybe an ascending wedge that could end up being a form of a wolf wave. But, I mean, the bulls are very obviously in charge. It's hard to disagree with them, at least. Gold acting like that POC didn't even exist. It's just gone. All right. Sellers are obviously in control. S&P is back above the settlement. Well, was for a second. NASDAQ is, and has been for a little while. Sheesh. S&P pulsing back up above, NASDAQ continuing back down. If they can get a dip back underneath like the 15s, that would be the zone of interest for bulls to try to pulse back higher on the NASDAQ. They hit 15 exactly, yeah. Back down to like the settlement area. Didn't quite get it. Nice little pulse lower for the bulls to try to grab that pop. Nice little scalper's objective back to the upside. Nice. Again, we're way up in the stratosphere. I can only scalp up here. That's my only choice. But, I mean, hey, there will be a couple opportunities along the way to grab the scalps, I guess. Quick 10, 15 tick moves on the NASDAQ, 4, 8 tick moves on the S&P. That's about all that's got built into it right now, at least. S&P continuing to drive back to the upside. So far, we've got... Make sure I start this on the right side. There we go. POC's kind of bouncing back and forth here. NASDAQ pulsing down a little bit. An overextension on the NASDAQ down into the 07s would be where a lot of traders probably have stops. That wouldn't really hurt my feelings. But this has gone like bear engulfing now. The S&P is still up at the top. On the NASDAQ, if they can get a pulse down to like the 05s, I could see it. Looks like the 09s are bouncing right now. Alright. Shifting the POC a little bit, but super even volume around here. Got about little over 1 minute to go on this one. Bulls trying to pulse back to the upside. POC on the S&P up at 45.17, but again, the volume's super evenly weighted. See what they want to do with it, but ooh, NASDAQ pulsing back down to the lows again. I would really like to see the 05s, 04s. That popped up pretty quick, though. First 5-minute POC is in. 45.1650 on the S&P, 15.422 on the NASDAQ. Crude oil still a mile and a half away from the area of interest, 82.65 for the swing short. Assumption is that the inventories will be bearish, but it's crude oil, and crude oil scares the crap out of me, so I would much rather sell in an optimized entry point rather than where it is now. This is a real tight NASDAQ range. I'd like to see them flush down. What'd they get down to? The 04s? 05s. Nice little pulse down into these lows. Ugh, I didn't get the other one. Okay. And the scalp back up to settlement. I really wish I would have got that second contract. That would have been pretty friggin' nice. But, okay, sure, whatever. That's good. No fill on the second one, but still got a scalp off the first. Just scalping. Not really much else going on. POC shifting down on the S&P a little bit off the first 5, and so far all of the 5-minute bars have been unable to close above that POC. NASDAQ starting to break down away. If we look at the larger perspective here, from where the market is, you know, again, we're a mile and a half away from anything of interest, but if the market were to transition, I mean, look at this thing. It's all higher lows. There hasn't even been a new low. What better spot would there be for swing longs in the short term, at least? Short-term swing longs. For a continuation bounce back to the upside. It'd be incredible right there. Right there, that would be around like 15,370. But if they break through that, then we would have a miss on the top of the channel and a potential overshot down to, yikes, 15,300s, 250s. It's pretty tough. Gold's not having any fun. Getting slapped around a little bit. NASDAQ jumping all the way back up. I really wish I would have been able to have that extra contract. That would have been real nice. $15,416.75 POC shifting on the S&P. I'm sorry, on the NASDAQ down a little bit, similar to the S&P, which also shifted lower. NASDAQ's trying to get above it. We had a bear engulfing first 5-minute bar of the day, preceding the candle before the open. And, I mean, there was basically no gap. It barely gapped up and then poked its head right back down again. Testing the first 5-minute POC up in these 420s. I didn't get filled at 401, I feel you. Yeah. It's so frustrating. But, you know, it is what it is. SOCKS. As long as you can spell socks, you'll be alright. I gotta get SOCKS tattooed on me somewhere. Maybe on like my pinky or something. Bulls trying to crack above that 5-minute POC. Tough time in the 422s, but we're getting through. S&P creeping their way up as well. Crude oil is a mile and a half away from the short. Gold is... I mean, they're kind of poking their head back above this POC. My concern is that there's only 1 minute left on the candle. Sellers initially would have been looking to sell into this if there were like 3 minutes left, 4 minutes left. Then they've got time for it to rotate down. Now, there's just no time. There's not enough. It's probably going to cycle up to the 84.4s now. Not unless they can pull off a friggin' miracle and get this thing to close back underneath 79. Hey, Shlomo, how's it going? Yeah, I know. No Phil John strikes again. There's a reason that name exists. Oh, get that as a tattoo. Oh, no, because then it's a curse. It's going to follow me everywhere. At least SOCKS I can use. I get frustrated and I want to punch something, I can see it in the reflection, you know? Slight candle gap on the NASDAQ to the down. Interesting. Little bit of excess sell pressure into this pop higher. This little bit of a dip lower, scalpers could be looking to pick up into the 22s. But really, I would like, I mean, the volume node's back down in the 17s. It would make a lot more sense for them to dip into the 17s or 15s to find buyers. I mean, they already found buyers, but like more of them. All right, continuation back up through the highs. Gold is starting to pressure back up there. Zone of interest is going to be the 84.4s initially. Area of interest, I mean, I guess in the nearest, that's still 24 ticks. So there's enough for a scalp inside that. But I also want to make sure that this fits to the downside, which it totally does not. So that is a horrible entry point. Much better to enter in the 86.3s. That would fit the 2-to-1 at least. For the 3-to-1... Oops. It can be a little lower. Not that low. Not that high. There we go. It gives us a zone around 87.2. Remember that bank robber setup? Yeah, Pip. I gotta get PYP on there somewhere. PPAP. Every time I think of PYP, I always think of pen, pineapple, apple pen, whatever. Pen, pineapple, apple pen. PPAP. Oh man, I did get filled at 422 for the test of the high scalp. Wicked me for a perfect 10 points. Nice job. Great work. Yeah, beautiful, quick little dip into that move before that rip. They got a pip and rip. There we go! Hey, pip and rip! That's what it is! It's a pip and rip. They pick your pocket and go ripping. And you could even do pip rip. Oh yeah, I love it. NASDAQ starting to dig down into that previous area. Now remember, the last time we were down here, we had an upward candle gap. This time we have a downward candle gap. The response to that upward candle gap obviously was up, and so far this one has been down. Kind of interesting to see where they're pulling back to, because this could also be seen as a false break of a range high, twin reversal style. Not as pretty. This is tough. Bitcoin made new all-time highs on Coinbase. Woo! There it goes, baby! Holy moly! Uh-oh! That is freaking crazy. If that's making all-time highs, that means that we are in a totally different scenario. Totally different scenario. We have to scratch everything that we've been talking about for the past 6 months, which I'm actually excited about. It's incredible, because that opens the door for some just insane movement on crypto. Holy moly. Oh, baby, the extended session is going to be fun. I'm going to spend some time in the extended session today going over crypto. So if you have crypto questions, I know I've already gotten a couple of them. Try to save them for the extended session. If you're obviously not a member on the YouTube side of things, then get them in before that, because I won't be able to answer them for you. But I am going to be hitting, in the extended session, crypto a little bit heavier, because this is, I mean, it's a game changer. This shifts everything. Everything. Lordy, lordy, lordy. Anyway, that's exciting. All right, next 5-minute bar closes 9:45. They both closed on top of the POC. Really? Gross. Man, that's terrible. Okay. Neither one, the S&P or the NASDAQ, given context. The S&P's got a ton of wick all over the place. The NASDAQ a little bit more open. I would prefer to see an S&P dip back down towards the settlement, like 1575. I feel like makes a lot more sense. It is kind of an open door underneath, though, because if they don't hold there down into the 12s, 13s, there's not really much until like the 10s and potentially down to 775. So understand the risks here. You're either looking for quick in, quick out, or you might be holding on for a little while dealing with some heat. Or you just take a stop, of course. A lot of different ways to approach it. NASDAQ pulling back up and retesting the 5-minute POC. They twin reversaled above and below it, technically speaking. But the market's closing above its POC as well. What a mess. Euro's off in La La Land doing whatever it wants at the moment. But that trap on the lows looks really nice. That dip right there. Vicious. I yike it. Bears still holding on the NASDAQ and pushing down. POC shifting down as well, 1850, although the S&P is back up towards the highs. We're going to have to recalculate value on the NASDAQ and the S&P, although we kind of assumed that was going to happen. Is that technically a gap down at 45.10? 1075. Oh, yeah. Put my mouse on it and then totally not leave it there. At 1075. Close, open, close. There's a gap up. There's a gap down. There's a gap up. Gap up. Gap up. There's a couple gaps in there, yeah. The S&P still pushing, no pullback. That's a bummer. NASDAQ may start playing catch-up here if we see the volume shifting hands. Starting to shift higher, bulls taking control, following along with the NASDAQ. A dip into the low 20s would be a favorable zone of interest for the bulls. Whoa, not there. Whoa, I almost got a horrible fill. Whoa! No thank you. I hit the bid, but it was after it popped up. Jeez. All right, we'll give him a minute. Yeah, I lost power yesterday. Really fun. Like, what was it? 7 minutes into the room and the power goes out. that was great. It's all good. We're back. Oh, S&P. Not much I can do about that one. Tried to get the pullback, didn't pull back far enough on the S&P, but really strong rally away. All right, I'll cancel the S&P. Not going to be getting that one anytime soon. Ooh, I hate the way these set up like this. On the NASDAQ, when you have a candle formation with a big wick top and inside really strong bull bar, a lot of times that next candle is a failure. I do not like that candle formation. I lost with that formation right here, I lost a lot of faith in the highs on the NASDAQ. On the S&P, this might just be an overshot on the highs for a major icing on the cake, but the problem is, obviously, you'd have to short the S&P when it's literally, you know, at the highs. That's a tough one. No thanks. If we can get a slight dip on the NASDAQ sub-20s, like into the 18s, it wouldn't hurt my feelings. That POC's back in the 1850s. Almost. Got into the 20s. Nice little poke down into that area of interest. That's the spot right there. A little bit more of a dip down into the 15s. Didn't quite make it there. Only got one. Pressuring down and attempting to fill the gap. There they got the gap fill. And given that I do have the NASDAQ for a long, I am open to take a short on the S&P now. So I can get that hedge to the downside and still make it work. Fantastic. The support zone for the bulls is around the 05s. I've already got a hedge on the table for the long on the NASDAQ with a short on the S&P, which actually we're right at about the scalp target. There we go. Nice little scalp target. I'll take it off. The entire reason that I utilize hedge positions in the first place is to take an open short to just scalp out along the way. And every time it gives me a scalp, I'll take it. I'm compensating the loss, effectively, that I'm going to have to probably take on the first couple positions for the NASDAQ long. It's the first time the NASDAQ's actually given us a chance to get something going. So I will start eating a little bit of the initial loss as we pull back up into settlement. In favor of trying to draw my average down into a more favorable location. Because now, that should open the door to fit at least a scalp inside the highs. Although I still can't quite fit a 2-to-1. I've got to do a little more work before I can get that in. Grab another one on the low for the NASDAQ. S&P's pulsing down. Trying to grab the scalp on the S&P, but So far, no fill. All right. Again, initially eating a little bit of the loss on the NASDAQ to draw my average down so that I can try to fit a 2-to-1 at least into the highs. And now we can get it. Nice. So now we've got a 2-to-1 that fits. I've got a hedge to the downside. If the NASDAQ wants to continue dropping, then I can take profit on the S&P. If we do go higher, then I'll liquidate the entirety of the position, the S&P and the NASDAQ together at the 2-to-1, eat the loss on the S&P, and why are my entries on there? There we go. Eat the loss on the S&P and use some of the wins on the NASDAQ to compensate for the hedge. And that puts a 2-to-1. Can I fit a 3-to-1 on the NASDAQ? I can't quite fit a 3-to-1. That sucks. I've got to do a little more work on my average to fit the 3-to-1. But we can fit the 2-to-1, so that's the objective at the moment. And we are going into 10 o'clock right around the corner. Probably going to be managing this one going into the extended session, I would assume, unless something crazy happens. But feel free to get those questions in. We'll get those covered for you. And like I said, I'm going to be talking a lot about crypto because that's a game changer, seeing that movement there. So we're going to be going over a lot of crypto in the extended session. But obviously, I'm still going to be watching this too. So. Looks like scalpers targets getting taken on the NASDAQ first. That's what this small little inside bounce very likely is. Yep. Nice little dip on the NASDAQ. Take another scalp target on the S&P. Couldn't quite get the next scalp target on the S&P. How did that do enough? Can I fit a 3-to-1? Is it good enough? Oh, just. All right. Nice. And actually now we've got a bit of flexibility to possibly start looking for quick little scalps on the NASDAQ if they offer them up. Otherwise though, 2-to-1, 3-to-1 up. 10 o'clock hits. We are at top of the hour, so feel free to get those last questions in, then we'll finish it up. Overall, gold and crude oil are probably going to be waiting. We've got the inventories around the corner at 10:30. The Nasdaq, I'm looking for a continuation to the upside, and with a hedge short on the S&P to the downside to compensate the difference. That's about it. Oh, and the S&P is right there. I'm going to look to see if I can grab another one on the S&P. Yeah, I was going to say, because I feel like I'm going to get that scalp filled a lot sooner than later. So just using the S&P along the way to compensate for it, but otherwise there's not really much else happening. Why jump out and then right back in again? So the idea of the Nasdaq, because remember, I'm taking losses on the Nasdaq along the way to draw my average down, right? So I initially started entering up in the 18s. That didn't work, so I had to start eating losses in the 08s, 07s, you know, in that area. So when I had to start doing that, taking a hedge to the downside on the short for the S&P, and taking a point scalp, reselling again, taking another point scalp, reselling again, taking another point scalp. Effectively, all I'm using the S&P for in the interim is to compensate for the losses that I had to take on the initial position. That's all it's there for. So that's why I'm willing to take a loss on it when the market turns around and starts, well, my anticipated move is up at least. So if it gives me a way to go higher, then I'll just take the loss on the S&P. But along the way, I'm going to continue scalping out of the S&P to compensate for the losses that I had to take on exiting my first positions, and I might even have to take a few more, and that's why I keep doing it. So, and if the market's going to keep falling lower, then it doesn't matter if I re-enter again. I'm just trying to liquidate and offset the earlier losses. So. I will add another on the NASDAQ as well as the S&P because we're now in territory where I like keeping my averages on the S&P at around 1 to 3 for the NASDAQ because the NASDAQ moves really fast. And as a hedge, if the market were to go screaming higher, taking a loss on 2 when there's 6 profitable NASDAQs, that's still okay, you know. These are going to be way off, though, so I'm going to have to recalculate those. Yeah, back to the POC on the S&P. If we go a little further, it's still the POC back down to 17. So, that's a hot spot for sure. All right. Well, I'm not seeing anything else. So let's switch over into the extended session and let the NASDAQ do its thing and keep on churning. Overall, I'm looking for a continuation phase to the upside on the NASDAQ to get back up into like the 1850s. Where my average is, though, it's not very favorable for a 2-to-1. I've got a little more work to do. I've got the hedge on the short for the S&P to compensate for the difference as well. But it still has a little bit of work to do, that's for sure. Nice pulse higher. S&P rotating down. All right. Anyway, let's switch over, and then we'll rock and roll. So for those of you who are ducking out for the morning, hopefully you had a great morning session. And for those of you who are sticking around in the extended session and rolling over there, then we'll see you in a little while. All you got to do is listen to me babble to myself for a second. I'll get the links posted, and then we'll rock and roll. All right. So have a great one. Enjoy. Rest up. I hope you had a great day of trading, and we will see you all back tomorrow. All right. Talk to y'all later. Thanks.